Hello dear students, welcome again. Dear student, this is the last video of your semester 4 Macroeconomics SYBCOM syllabus. In the last three parts, that is part 5, 6 and 7, I have discussed chapter 1, 2 and 3. So dear students, in this video, I am going to discuss the last chapter of your SYBCOM macroeconomics syllabus or business economics syllabus, and these are the topics. This is public finance and meaning, definition, scope, importance of public finance, meaning and types of taxes, public expenditure, public debt and budget. So dear students, still if you have not subscribed the channel, please do subscribe and share with your friends. So let us begin with the first question. The first question is, public finance means study of income and expenditure of public authorities. Here public authorities include central government, state government, local government, all of the above. So here public authorities is denoting all central, state and local government. That means the public finance deals with the income expenditure of all levels of government. So correct answer is D. The scope of public finance is wider and comprehensive, and it includes public revenue, public expenditure, public debt, financial administration of the government, all of the above. Yes, dear students, you might have guessed. So these all four come under the scope of public finance. So the last option E is the correct answer of this question. Public finance is concerned with the income and expenditure of public authorities and with the adjustment of one to another, inverted comma close. So this is a definition. Who gave this definition? H.L. Lutz, Hugh Dalton, Finlay Shiras, Richard Musgrave. Yes, the correct answer is Dalton. Dalton gave this definition of public finance. So B is the correct answer. Public finance, again another definitional based question. Public finance is the study of principles of underlying the spending and raising of funds by public authorities. Who gave this definition? H.L. Lutz, Hugh Dalton, Finlay Shiras, Richard Musgrave. Yes, the correct answer is Finlay Shiras, who gave this definition of public finance. The public finance deals with the provision, custody and disbursements of resources needed for the conduct of public or government function. Okay, the functions of government are performed and it requires finance. So the overall management and raising of fund comes under the public finance, that is given by this definition. So who gave this definition? This definition was given by H.L. Lutz. That is A. A is the correct answer. So dear students, we have taken three definitional based question here. These are three popular definition of public finance. So please keep in mind and memorize it. Moving to the next question. Who among the following gave the principle of maximum social advantage? This theory is also very popular in public finance. Theory of maximum social advantage. So who gave this theory? Alfred Marshall, Hugh Dalton, John Maynard Keynes, Karl Marx. So this definition, this theory of maximum social advantage was given by Dalton. So this B is the correct answer. Maximum social advantage is achieved when at the point where marginal social benefit of public expenditure and the marginal social sacrifice of taxation are equal. That means when MSS is equal to MSB, marginal social benefit, that at that point there will be maximum social advantage as given by Hugh Dalton. So correct answer is A. I'll show you with the help of a diagram how it is achieved. So let us quickly see. This is the diagram used to explain the theory of maximum social advantage. You can see this is increasing MSS curve, that is maximum marginal social sacrifice curve, which is continuously rising as the tax imposition increases, sacrifice increases, and the MSB curve, that is marginal social benefit, keep on declining as the expenditure increases. Okay, so you can see on y-axis we have sacrifice and benefit, and x we have taxation and expenditure, and this is the point P point where MSS and MSB both are equal. At this point, OQ amount of taxation and expenditure, if the tax amount and expenditure equalizes with OQ amount, then the both MSS and MSB will be maximum equal, and there will be max total, this whole area is the maximum social advantage area. Okay, this it will be maximized. Suppose if say, just a second, let me erase this. If this what do you call tax is at this level, OQ1 level, the amount of tax is OQ, so that much will be the revenue, and at that point the benefit will be at P1, whereas the sacrifice will be at S1. So sacrifice is very less and benefit is large, so there is a scope to increase that amount of tax and spend. Okay, so as you keep on increasing the tax, you will move like this, you will move, and you ultimately will reach to this P point, and the advantage, social advantage, will be maximized. If you increase this point P, then your sacrifice will be more and the benefit will be less. As you can see here, if amount of tax is Q2, then at this level the sacrifice is S2 Q2 and the benefit is P2 Q2. So this S2 P2 amount, this is the difference. Okay, so this way you can explain marginal social advantage. So actually, as you have seen in the previous question, this where this maximum social advantage will be achieved, where the point where MSS is equal to MSB, that is shown with the help of this diagram. Okay, moving to the next question. Taxes are compulsory payments to the government based on no direct quid pro quo principle. What is the meaning of quid pro quo? Ability to pay, a status in society, equity, give and take. Quid pro quo means give and take. So in tax is a compulsory payment to the government based on no direct quid pro quo. The government doesn't pay anything to the taxpayer directly, so no quid pro quo principle is applied, no give and take principle is followed while imposing the taxes. So correct answer is D. Which one of the following is the example of indirect taxes? Corporate tax, state duties, service tax, interest tax. A very easy question. So by now you might have guessed the correct answer is service tax is the indirect tax, whereas corporate tax, state duty, interest tax are the example of direct tax. Which one of the following is the example of direct taxes? Custom duty, excise duty, GST, wealth tax. So here this last one is the correct answer. Wealth tax is the example of direct taxes, whereas all these above three are indirect taxes. Okay, the tax on net income of companies is called personal income tax, no interest tax, wealth tax, corporate tax, no doubt. So it is corporate tax. So D is the correct answer. Moving to the next. The difference between revenue expenditure and revenue receipts is called revenue deficit. So this A is the correct answer, dear students. So dear students, still if you have not liked, please hit the like button so that the video is shared with maximum number of students. Moving to the next question. The difference between total expenditure and total receipt is fiscal deficit, budgetary deficit, primary deficit, revenue deficit? Yes, the correct answer is budget deficit. Total expenditure minus total receipt will give you budget deficit. Okay, B is the correct answer. Expenditure incurred by the government on building durable assets like highways, multipurpose dams, irrigation projects are in the nature of revenue expenditure, transfer expenditure, just a second, transfer expenditure, capital expenditure, unproductive expenditure. It is capital expenditure. Construction of roads, dams, irrigation projects comes under capital expenditure. So C is the correct answer. Which one of the following is the example of non-tax revenue? It is not a tax revenue. License fees, gifts and grants, revenues of PSUs, S-sheet, all of the above. Actually, all four are the example of non-tax revenue. Okay, it's very clear. S-sheet is something, if any person dies and there is no heir and there is no will left, then the government acquire the property of such deceased person. That is known as S-sheet. Okay, so this way all these four are the example of non-tax revenue. So E will be the correct answer. Moving to the next, which one of the following statement is correct? Here, dear students, these are types of taxes based on the tax rate. So we have proportional tax, progressive tax, regressive tax, degressive tax. Proportional tax implies that when the rate of tax does not change with the change in income. Progressive tax implies the rate of tax increases as the income and there is increase in income. Regressive tax implies the rate of tax decreases with the increase in income, whereas degressive tax is the tax in which the rate of tax increases with the increase in income, but after reaching a certain specified level of income, the tax rate becomes constant. So this way, these are nothing but the definition of these four types of taxes, and all of the above are the correct definition. So E is the correct answer. You need to see it properly, understand the concept properly. Which one is the cause of increasing public expenditure? Increasing population, increase in social services, urbanization, interest payment, all of the above. Yes, dear students, all of the above is the correct answer here, because public expenditure is increasing because of all these factors. Okay, redemption of public debt means repayment of debt, repayment of FDI, additional borrowing, deficit financing. Yes, redemption simply means repayment, redemption, repayment of public debt or debt. So A is the correct answer. The debts which the government promises to pay off at a specified date are called irredeemable debts, funded debts, redeemable debts, unfunded debts. Yes, when it is promised to pay at a specified date, it is known as redeemable debts of the government. So C is the correct answer. A budget where there is excess of expenditure over revenue is called, yes, dear student, deficit. You are aware of this, you must be aware of this, that is deficit, when expenditure is more than the revenue. Okay, B is the correct answer. The fiscal deficit excluding the interest liabilities for a year is called as revenue deficit, capital deficit, budget deficit, primary deficit. It is known as primary deficit. Fiscal deficit minus the interest payment will give you primary deficit. Okay, the current financial transactions of the government which are of recurring in nature, that is happening again and again, is known as a revenue budget, like salaries of government staffs. Okay, so that is part of a revenue budget. So A is the correct answer. Dash is a statement of estimated capital receipts and payments of the government over a fiscal year. Okay, revenue budget, capital budget, surplus budget, deficit budget. So when there is capital receipts and payments, that is no doubt will be the part of capital budget. So B will be the correct answer. Thank you, dear student. All the best. Do well in the examination. If you have any questions, do write in the comment box. Thank you.